this video, we will look at what trading is and what it isn't, different types of trading, how much you need to start, how to become consistently profitable, plus everything you need to get started to become a day trader. Before we start off, I have a very clear warning. This video isn't some corny YouTube guide. I will actually be sharing the truth on what it takes to become profitable. If you came here to hear about parties, cars, degeneracy, or just lifestyle marketing, this video isn't for you. Only continue if you want real trading education. And from my experience, from what I see from my mentors and other people who came before me on what trading actually is and how to actually make money from it. So what is trading? Trading is basically just the buying and selling of specific assets with the goal of making money. In any market, there are buyers and sellers. We make money based on being right on the direction of a market. There are many different things that you can trade though, from stocks to crypto to futures and Forex. Most people who say they are traders are inside of one of these four categories. They either trade stocks, crypto, futures, Forex. Now, later on in the video, we're going to get into what the different markets are, stocks, crypto, futures, and Forex. We're going to go over each and every single one of them. So what isn't trading though? Specifically, trading is not a lifestyle and it is not quick money. You might have seen on Instagram, you might see on Twitter, you might see on all these other places of people living a certain lifestyle and just showing instant profits. That is not trading. That is marketing. Real trading shows losses. Real trading shows this percentage. Real trading shows break-even months, losses. This just trading from a beach or something is not real trading. It's trading, but it doesn't show the full picture. Same thing here. I just have an MT4 screen. This is trading, but it doesn't show the full picture. I know that many beginners come here thinking that, oh, the first year, the first couple months, I'm going to be living like this, or I'm going to be making profit like this, when that really is not trading. Like I said, trading is not account flips. It's not a flashy lifestyle, and it's not a get-rich-quick scheme. And most of all, trading is not easy. Every one of these things you might see on social media. People think you can make instant profits or you can get into this game and skip the grind of it. And I'm here to tell you that there is no skipping any process. You have to put your all into this or you're not going to make the profit you want to make. Literally 90% of traders lose money 90% of the time. What makes you different coming into this game as a beginner? Most beginners quit before it gets easier because they see this lifestyle and they're disappointed. And I'm here to tell you to set your expectations right before we even get into what day trading is. So first, let's go over stocks. A lot of people know what stock trading is, and it's more of looked at as professional because of people on Wall Street, just the US economy in general, with the indices like the Dow Jones and the Nasdaq. Most people are familiar with them. But options are bought in the form of contracts for a specific company. So what do I mean by that? That means you could trade companies like Nvidia or even CVS, Walgreens, Walmart, Cat. You can trade a whole bunch of companies. The stock market is so large and so vast, and each company has their own specific form of contracts that you can trade with. I don't want to get too deep and too specific into stock options because that will take a whole video on its own. But basically, they are a form of contracts that you can buy in baskets of 100 based on the company that you are speculating on. So options are normally the main way that traders inside of the stock market trade, because options have the amount of leverage that come with options exceeds every other market, honestly. And then there are many companies to trade with, which goes into edge, which we're going to talk about later on in this video. Now, to see an actual example of this is Nvidia on TradingView. This is Nvidia stock. So as you can see, this is the price of Nvidia and how it's been moving over the past couple of days based on the 4-hour time frame. So this would be an example of a company that we would be able to trade. Like if I go on my phone, if I go on Robinhood, buy or sell some Nvidia calls or puts and make money off of that potentially. if I have a working strategy. But we'll get into all of that later on in the video. But this is just one example of a company. There are hundreds and hundreds of companies that you can trade. Now, futures are the buying and selling of contracts similar to options, but their function is very different. So futures looks into different assets such as indices. You have currencies, you have commodities. You could trade commodities like gold. When I first came into the market, I didn't even know what commodities were, honestly. But commodities are things like gold, silver. You can even trade gas. There's so many things that you can trade inside of the futures market that a lot of people just honestly don't know about. I've traded corn before. I've traded wheat. You can trade Bitcoin futures. You can trade a whole bunch of things. Options, like we said earlier, focuses more on companies, where futures focuses more on assets, and you have indices, you have currencies. It's more, we don't use futures to focus on specific companies. From what I know, we don't use futures to focus on specific companies. If I was to dive deep into the difference between futures and options though, that would literally take a whole video for me to explain on its own. But just know that futures are different than options. The main thing is that option stock traders focus more on companies. They can trade indices as well, but futures focuses more on commodities, indices, currencies. An example of this is gold futures. So here I have gold. We all know gold, the same gold that it's all over the world. You can trade it, go in the futures market. This is the price of gold recently and how it's been, trending upwards and how it's been moving. So as a trader, I could come to the market and be like, oh, I want to buy 1 or 2 contracts of gold. And then based on the price of gold and how much those contracts are worth determines how much money I am going to make. That's basically the essence of futures trading. If the price doesn't go in my direction, like let's say I bought right here at the top, price rejects, goes down, I'm losing that money now. But if price goes in my direction, I'm making that money. Now let's talk about Forex. Forex is the main market that I came into as a trader. I traded Forex for 1.5 years, basically, before differentiating to other markets. The market I literally know the most about, just because it was my first introduction to the whole trading scene. The Forex market is honestly one of the biggest. It is the biggest market out of stock trading, out of futures, out of crypto, out of all of it. It's the most liquid. And by liquid, I mean the amount of participants who are available to trade and make money. There's a whole bunch of things happening in the Forex market from day to day to day. Is $7.5 trillion being traded every single day inside of the Forex market. Because if you really think about it, currencies trade against, all the Forex market is one currency trading against another currency. So we might have the British pound being traded against the US dollar. Inside the Forex market, this is called GBP USD. And we can track all of this on a chart. Just like we could track gold futures, we could track GBP USD, which is inside the Forex market, on that same looking chart and make money off of it. But the things that move the Forex market are a bit different than the things that move futures market. They're similar, but there's a lot that goes into the Forex market. If you ever been to another country to exchange money, literally, that's trading. And that plays into the whole Forex market volume as well. Big companies, people all over the world are constantly exchanging money for different things that they might need, and that goes into the volume inside of the Forex market. Now everybody is just trading to make money. Some people are just trading specifically to exchange, honestly, which is why it's called the foreign exchange market. Now for me personally, I'm not gonna lie, Forex is, looking back, just to say it right now, Forex is probably one of the hardest markets for me to be consistently profitable over time. And I'm going to explain that later on. But it's a good introductory market for beginner traders. But I will say it's the hardest market to have, what we're going to talk about later, which is edge. Next, we have, last but not least, the crypto. So the crypto market is very unique because it has just, not like recently, but more recent than futures, forex, stocks, but it's coming up inside of the whole entire trading scene. So crypto is basically a decentralized market where assets or tokens are bought and sold. We have Bitcoin, we have Ethereum, we have Litecoin. I don't know too much about the other coins, but we have a lot of coins that we can trade, and there is very high volatility. What does this mean? What does the word volatility mean? This means that basically there's a high amount of swinging in the price of Bitcoin. One time it might be trading at this point at a certain price. Next day is trading way higher. The next day, the next 2 weeks is trading way lower. It has a lot of swinging inside of the price. The range is very high to trade with inside of the crypto market. If you have ever traded Forex, and if you ever looked at the crypto market, if you ever looked at the stock market, the futures market, you'll see crypto is probably on the more higher volatility side of things. And volatility is very important. We're going to get into that later on as well. Now that we have gone over the different types of markets and the different assets inside of those markets, now we can go over the different types of traders. So in each one of these markets that we've explained, Forex, crypto, futures, all of that, there are different types of traders who can trade these markets. Because if you really think about it, every trader is not the same. So this video specifically is about day traders, but we do have swing traders, position traders, scalpers as well who trade these markets. The difference between swing trader, position trader, scalpers are swing traders usually hold trades over weeks. They don't just get in and out in the market during the day. They hold for weeks. Position traders hold for months. Scalpers hold for 5 to 1 hour to maybe 2 hours at most. But day traders usually hold a position during entire day or take up most part of that day. Now, to me, scalpers and day traders can be like interchanged, because technically I'd be classified as a scalper, but I also call myself just a day trader as well. As I said earlier, day traders normally buy or sell specific assets, whether it be forex, crypto, stocks, etc. during a 24-hour day. They're usually in and out of the market. Now we're going to get into the part that everybody loves. How much money do you need to start day trading? Very controversial topic right here. And I'm going to give you guys the full picture of the truth, and nothing only but the truth, on how much you need to start day trading. There's a difference between starting and becoming an actually good trader and making consistent money. I think that's a problem that marketers and people online try to put inside of you guys' heads, inside of beginners' heads at least, is that starting is the same thing as succeeding. Starting is just starting. There's a low barrier to entry inside of any stock trading, inside of futures, inside of Forex. There's low barrier to entry. You can start an account with any monetary value. You can start an account with $10 if you wanted to. And I do suggest you start out with a low amount. But that low amount is not to be confused with you making big profits immediately. That low account is just there for you to practice, to be able to see the market and see its tendencies. First, I want to just say it again. There's a difference between succeeding and starting. If we're starting out in practice, just like in any other profession, any other field. If you're becoming a doctor, you just don't start off, go to school for 4 years or 8 years or whatever, and then go straight into the field. You have a mentorship. You have practicing. You have to become good enough to earn that real life experience inside of the live markets. I say you can start off with any amount. If you have $10, you can put it into an account, but don't expect to make big profits. We're here to practice. The big profits will come later once you've mastered the skill set. Now, how long will it take? The next controversial question. This mainly depends, and so many traders are worried about how long it will take instead of becoming good traders right now so that time can be cut in half. But it really depends. I'm going to tell you guys the truth here. The honest to God truth, because I know traders who have been trading for a year and are profitable right now. But there are also traders who've been trading for 5 to 8 years and are not profitable. But I would say honestly, if you're trading for a year, I don't feel like that's it yet. but I've seen like a year and a half, a year almost going on 2 years, people becoming profitable, getting payouts from prop firms, and posting good P&Ls. But I also see people 5, I've even heard 8 years where they aren't making consistent money from the markets. So I'm gonna say this: past a year and a half, it doesn't really matter how much education you have, how much you've learned. It more so matters how much work have you put in. Are those years that you're putting in, those months, those nights, are you putting in the same amount of work that another guy is putting in? Do you really want this skill set, or is it more going to be like a part-time thing to you? Because that's going to really determine how long this thing is going to take, because it will determine how serious you're going to take this skill set. My first 3 months of trading, I want to tell you guys, I'm so serious here. I had a Henkel Trade account. If any of you guys know Henkel Trade, I don't trade with that broker anymore because reasons. They really scam me, and I don't like what they did. I don't like trading unregulated brokers nowadays. But when I was trading with them, when I first started trading, the first 3 months, I turned $100 into $1,000, and I lost all of it. I lost all of it. So that's just to say, you might think that somebody has made it, but inside of the trading markets, you are only as good as your last trade. There's a difference between also making quick profits and actually being a consistent trader. There's a reason why a lot of people don't post their P&Ls. There's a reason a lot of people don't post their broker statements. There's a reason a lot of people don't look at their trading dashboards, their prop firm dashboards, all of that. It's because over the long term, it is really, really, really hard mentally, strategy-wise, seasonality, to consistently beat the markets. You need to have everything intact. So it really depends, and you can't really gauge consistent profitability until you've been consistent for months. You have to track your data and look back and be like, okay, I'm actually making money from these markets now. I have my data here. I can look at my broker statements. I have everything. And even then, you still have to be on your toes and be humble enough to be like, oh, maybe I'm still not consistent yet. As an estimate for you to start seeing good results, with good education, I would say 1 to 3 years. And the thing is, good education, that's another very important, very, very, very important topic. There are certain things that if I would have known year 1 of trading, I would not have to go through. I just say with a good education, not bad education of people teaching you unrealistic profits and lifestyle marketing. That whole thing, I was lucky enough to have a good mentor who I trusted, who wasn't really, he was self-made, and I trusted him. He worked and traded at the same time. You have mentors out here nowadays who just push marketing. Honestly, just push marketing on you guys. But that education is not actually probably good enough. It might be good enough for a certain subset of people, but it's not good enough education to put you on the right path to make consistent profits inside of the markets. Derail your learning curve as well, because you might have a bad mentor for 2 years straight, and then your third year, you finally get some good education, and now you're making money. Even though there's a lot of things on YouTube, but on YouTube it's really freaking hard to decipher who is really good to listen to and who's not. Now we're going to get more into the actual charts. We're going to get into charts because every market, as I said, has their own chart, just like you've seen with Nvidia, just like you've seen with Forex futures. We're going to get into that, and we're specifically going to look at candlesticks right now. So a candlestick is just a representation of what buying and selling inside of the real markets. So typically the red candlesticks, I know that we have blue and white right here, but this would be a red candlestick and this would be a blue candlestick. So typically red candlesticks represent selling pressure. So in this instance, this candlestick would be the selling pressure, and green candlesticks on a normal chart represent the opposite, which is buying pressure. Let me go back to, if we go back to gold futures, as we can see right here, this red candles, all of these red candlesticks are sellers. All of these red candlesticks are selling pressure on the markets. And then all of these green candlesticks means the buyers were in control. Buyers were pushing up price. Once you see this red, sellers are pushing price back down. Now this goes into what is price action. all of these candlesticks on a chart, how much or how little an asset has moved over a quantity of time. So if we go to this example here, I know we can't see the date, but we can see we have both buying and selling candlesticks. You see that when we're buying, price is going up. Then when we sell, price goes down. And then price goes up again. And then we sell, price goes down. So this is all over a quantity of time. We track it by time normally. The main way that people track it is by time. But there are other ways to track price other than time. And people don't really know that. You can track it by other ways than time. But the main way people use to track it is by time. So this is a 4-hour time frame. Each one of these candlesticks is 4 hours worth of price action, 4 hours worth of buying and selling. So in these 4 hours, we saw there was a heavy amount of buying. There was more buying than selling, which is why we have this fat candlestick. And then we can see here, this 4 hours, we had more selling than buying, which is why we have this large selling candlestick. It's as simple as that. This creates price action, which is very important for later on when we talk about strategies. Price action is basically the only way how we make money inside of any market, honestly. Not the only way, but it is one of the ways that we make money inside of the markets. Now we're going to get into a very important topic, which is the concept of edge. Now, as a beginner, I could go into brokers, I could go into trading platforms, I could go into different things, but all that does not matter at all. In this sense, all that does not matter if you don't have the right framework, the right mindset to start thinking about trading. This video, we're not talking about platforms, we're not talking about brokers, we're not talking about meaningless things. We're going to be talking about what you actually need to make money in these markets, because we could talk about all of that later inside of a part 2 video. But what I want to drill inside of all you guys' heads, honestly, even if you're an intermediate trader, is that you need an edge to make consistent money. You might look at that and say, oh yeah, well, duh. But the concept of edge is frowned upon, or not even really looked at in depth inside of the trading community. The only way to make money long term is if you have a consistently profitable edge. If you don't have a consistently profitable edge, what are you doing? What is trading? It is gambling. It is 50-50. You're just playing and throwing your money inside of the markets. Now, what is a trading edge? So we need an edge to make money inside of the markets. We can't make consistent money anywhere else inside of the markets, inside of any market. I don't care if it's crypto, futures, stock trading, and all of it. We need edge. We need edge to make money. A trading edge is a combination of 4 distinct factors. We need strategy. If you don't have a strategy, then you're not going anywhere, honestly. If you're a beginner, you're just buying and selling price at any time of day, you're gambling. You're gambling, honestly. So we need strategy. We need risk management. We need mindset, and then we need execution. All of these together make a strong edge. But alone, you can't do anything, honestly. You can't have one and not have the other. You can be okay in each one of these, but you can't be totally off with one and expect to make consistently profitable money inside of the markets. Now, like I said, many traders out here are freaking gambling. Traders mess up in one of the 4 key areas, which turns them into mindless gamblers. Hear me out as a beginner or an intermediate trader along their journey. If you're intermediate and you have already lost a lot of money, but you can't seem to cross over into profitability, know that you are most likely falling into the gambling trap that trading provides. Most people fall into the trap of one of these. If it's the most ones are either mindset or risk management, honestly, which turns them into wasting lots of money inside of the markets. I've heard people lose millions. You can even see hedge fund owners, prop firm owners losing tons of money inside of the markets due to not being sound in one of these areas. Even the professionals. So imagine us as retail traders. Well, how much better are we? Think about how much better we have to be inside of all of these areas. Honestly, we have to be literally solid in all of these areas, because if professionals and hedge fund owners sometimes get it wrong to the point where they're losing a lot of money for basically no reason based on emotion, lack of risk management. Imagine us just trading by ourselves. And many traders gamble because you don't know, honestly, if you have an edge, because lack of personal data. The reason why I am so passionate about this is because I was the same way. I'm not just talking to talk. I went through the same process that you're probably going through as a beginner or an intermediate. I went through that full cycle of thinking that I was making progress, but I was really just gambling. I was really just throwing my money away into the markets, wanting a certain outcome, honestly. But you need to track with personal data to know if you have a consistent edge. Now let's first go over the most important building block. One of the most important building blocks of the whole four sequence of trading edge is having an actual strategy. This is probably the easiest part, honestly. The easiest part is finding a strategy. Finding a strategy is easy, especially with the amount of education that's available nowadays. So all a trading strategy is it signals you to get in and out of the markets. So that you do not get in at random, you have this strategy that you look at now, whether it be support and resistance, supply or demand, ICT, Wyckoff theory, anything, honestly. It could be Bollinger Bands for high carry, it trend lines. It gives you a signal to get in and out of the markets based on different factors of confluences that you have put together, and you've mapped out this strategy. Alone, like I said, let me circle this. Alone, right here, alone. It does not give you a full edge in the markets. Trading strategy alone does not give you the full edge. It doesn't, honestly. And people get this mixed up. They'll have a strategy. They'll have, even data on the strategy as well. But either they can't execute it properly, or they don't know when not to trade that strategy. And they think that the strategy doesn't work. They think the strategy itself is flawed. There's a reason why you have profitable ICT traders, profitable SMC traders, profitable people who trade support and resistance, and you have unprofitable people trading the same thing. There's a reason for all of that. Because you have to curate that strategy to yourself, honestly. But anyways, every strategy has a certain win rate. Every single strategy has a certain win rate. So just like in real life, like I could compare this to basketball. Inside of basketball, you might have a certain shooting percentage, So you shoot the shot a certain way from the 3-point line, you might have a 30% or 25% shot rate from that area inside of the 3-point line. It's the same thing in trading. A certain strategy, you can have 50% win rate, 60% win rate on its own. You have this repeatable thing that happens inside of the market that gives you an edge when certain confluences are built up. So when we're talking about strategy, most people get their strategy from using technical analysis. We have people who use just technical analysis. What is technical analysis though? Technical analysis is basically using historical price action to try and predict the future movements that a price will make. It's all historical. Everything that happens in technicals is historical. And this provides both a good and bad thing. Because at one point, you can have a strategy that, has been working for like 20 years. I backtested, if any of you intermediate traders know about backtesting, which is basically going back and looking at price and whether your strategy works during a certain set of years. It's basically going in the past to test your strategy. But I backtested a strategy for 6 years. 6 years. You can have a strategy that works for 6 to 10 years straight, just based off of technicals. And that's the good thing about it. But the bad thing about it is that, what do markets do? The market is the market. The market changes. The market flows. Some things are repeatable. Some frameworks are repeatable inside the market. But a lot of things in the market are constantly changing. So your historical price action strategy based on like 2 moving averages might not work in today's market environment because of other things that we're going to discuss. You can never though have 100% win rate, 90% win rate. I'd even argue against an 80% win rate. If somebody has an 80% win rate, I would ask them, even though I've seen it before from a credible trader, but he has been trading for like 4 or 5 years. If somebody claims they have 100% win rate, they haven't been doing it that long, ask them, to see their live broker statements for over 1 year, because it is very hard to beat the markets 80% of the time, 90% of the time, just because they're constantly change. Certain aspects of the market are just constantly changing. Next, I'm going to go into liquidity. See, you might have saw me say liquidity earlier. All liquidity is people. Liquidity plays a very huge role when we're talking about technical analysis, especially when we are day trading. Most strategies are built from liquidity and don't even really know it. Liquidity is literally the fuel of the market. It's the backbone, to me, it's the backbone of all technical analysis, because liquidity is just participants. The market is made out of buyers and sellers. Price must go to certain areas and take out certain people in order to move to another direction. And honestly, this is all just a form of different buyers and sellers showing on the charts to create technicals. So I've gone over liquidity because I just want you, as a beginner, as an intermediate, to start looking at how important liquidity is when we are inside, and especially when looking at technical analysis inside of any strategy. Next, let's look at very looked over part of trading in general. Fundamental analysis. Fundamental analysis is very huge, honestly, and not a lot of traders look at fundamentals because price is priced in. News is priced in, right? And what does priced in mean? It means that news, for the most part, a lot of news that happens inside of the futures market and the Forex market is priced in. And we're going to talk about inefficient markets and efficient markets. We're going to talk about volatility now. And we're going to talk about an edge when it comes to Forex versus other asset classes. So, like I said, people think news is priced in because all priced in means is when a certain news event happens, whether that be CPI. If you don't know what CPI is, then you could look it up, right? It's one of the red folder news events that happens every week. Not every week. It's one of the red folder news events that happens every month inside the markets. There are different events. We have NFP, we have CPI, we have PCE. All these events tell us the state of the economy. Very important, because why do markets exist? Markets exist to show how an economy is doing, where the money is flowing, and honestly, it's a good gauge of what is happening inside of the economy. Fundamentals directly influence the overall direction in the markets. So all that I meant earlier, that people think, fundamentals are priced in certain markets, is because when news happens, you might have a news event, right, that happens on gold or silver or something like that, and the news event comes out positive, but you might see price do the opposite of what the news event is, because those people have already bought price before that actual news event happened, because people at the top have different information than us retail traders. So I'd say fundamental analysis works better. It works in all markets. You can be a fundamental trader. I see traders on YouTube with good credibility who use fundamentals, use the overall fundamental themes of the markets, and then use technicals to be able to make money. That itself is an edge by itself, because once you know the overall fundamental theme, it becomes so much easier to look at the technicals and make money. But to me, it works better in inefficient markets. The concept of inefficiency versus efficiency is very important when we're talking about fundamental analysis. So people don't really understand, what is inefficiency versus efficiency. Efficiency means that when a news event comes out, right, price already reacts or already has reacted to that news event. So it's really harder to make money immediately off of the news. But in inefficient markets, equities, crypto, when news comes out, you can catch that news move because it is a little bit slower when we're trading companies, when we're trading crypto, for news to price into the markets. So you'll have a news event that comes out, you might be able to catch the move beforehand and then make more money. So that's why I say that stocks, equities, crypto is a little bit easier to have an edge, because if you really think about it, If we're trading volatile news that has a big impact on the markets and you can catch the move beforehand, it's going to be easier to make money consistently. Then the Forex market, where the Forex market, first of all, the Forex market doesn't have that many news events happening. So there's less volatility, there's less movements, and we make money from volatility. Volatility is very important. Indices are more volatile. The futures markets are more volatile. Gold indices, which makes it a little bit easier to become a consistently profitable trader because they move more in a certain direction because of fundamentals, because of news. There's more volatility. There's more news coming out every week that affects price. Stocks, even more. You have specific company news, which is very important. In finance class, we describe it as company-specific risk. We have news events that happen with shareholders inside of the company that makes price move. So you might have more of a movement. So these fundamentals affect markets differently. And it's very important when trading certain assets, like I said. But it's also important just to know the state of the economy. Like as I'm recording this right now, we are inside of an election week, so there's going to be more volatility. As a retail trader, if you're just trading, you don't know. You're going to be trading on Monday or Tuesday before elections and getting beat out because you don't know the overall theme of the market. Knowing your fundamentals gives you a little bit more context to the direction of price. Now we're going to get into the second pillar of having an edge inside of the markets, which is risk management. Risk management in a sense is just how much you risk per trade idea. So it is very simple, but risk management was honestly my downfall as a trader because it's a little bit more not hard to follow. I'd say it's hard to follow. It's simple. Honestly, it's simple. Per trade idea, you risk a certain amount, and combined with that win rate can make a strategy work. So let's say we're trading simple old trend lines, and our strategy has a 30% win rate. If every time I risk $1, right, on every trade idea, but each time I win, I make 5. I'm going to be consistently profitable long term. So risk management is very important, very, very important, especially when we're talking about edge and when things happen inside the market. So like I said, let's say I risk a 1-to-1. This is the risk right here, and this is the reward over here. I risk $1 to make $1. Now, as we can see on this chart, like I just explained earlier, this is your strategy's win rate up here. This 20%, 30%, 40%, 50%. Most traders, for any strategy that I've seen, over the long series of trades, are in between these. Somewhere over here, especially your first year of trading, you're either 50, 40, 60, honestly, or even 30. But as you can see, with a 30% win rate, risking 1 to 3, you just have to be profitable over 25% to be able to make consistent money inside the markets. Think about it like the casinos. You don't need the biggest edge to be able to make consistent money. It would be helpful to have a bigger edge because then you're making more money from the markets. But you don't need the biggest edge, honestly, to be profitable at least. To get started being profitable and just not losing, you don't need the biggest edge. So with a 30% win rate combined with a 1 to 3, you'd be making consistent money. Now with a 1-to-1, you just have to be right 60%. But having a 1-to-1 is kind of hard when you have commissions and fees and all that. Because I've been all around here. I've been on every single metric. I've had a 1-to-1 strategy where I had around a just above. It wasn't even 60%. It was like 55 or something. Then I've had 1-to-2. I had just above a 30%. It was hard to make money consistently due to my mindset, commission and fees, and everything. And now, me personally, I go for 1 for 4s and 1 for 5s. That doesn't mean I make 1 for 4, 1 for 5 each time, just because the way I manage my trades. But I have around a 40% win rate, right? And I average a 1 to 3, between 1 to 3 and 1 to 4 on average. Well, more so 1 to 2.5, 1 to 3, just because of how I manage my trades. But I'm around the 40% to 50% mark, which shows, and I make a good percentage month over month, and it shows that you don't need much to be profitable. to go into that consistently profitable area. Now, with risk management, a lot of traders mess up here because why? Why do traders mess up? It's either they're not following their strategy to the T, or they're letting their bad days really mess up their winning really good days. Honestly, you might have a day where you go for a full 1 to 4, right? You risked $1, you did your thing right, you saw your strategy, you made $4, right? But then you have a day where you completely blow up because of, the market tendencies, you're mad at the market, you're punching your screen and everything. Now your risk management is all messed up. Traders will do this consistently. I used to do this consistently, where I'd blow up. I'd get so mad at the markets, lose all my profit for months worth of profit, of progress. Even more important, progress. You might be making progress, and then all of a sudden you have a bad day and you want a revenge trade. That one day can mess up 2 months worth of work, and that's what makes trading hard, honestly. And we're going to get into mindset now, which goes along with this whole risk management. If you don't have the right mindset, your risk management is going to be piss poor trash, because you're not going to be able to be patient, wait for the right days, wait for the right opportunities to be able to make, good money inside of the markets. So when we talk about mindset is self-control and discipline inside of trading. I could just simplify it as self-control and discipline. Most traders have a certain expectation of the markets, which leads them to lack this. Their mind can't fathom is happening inside of the present moment, which leads you to screw up your risk management, which screws up your entire edge. You remember how we said that you need risk management and you need mindset. If you don't have these two, you're not going to be profitable. So they'll have a certain mindset on the markets will go against you, and now you want revenge. Now you're getting mad. Now because you want to leave your job, because you want that lifestyle, because you want to make big profits, because it's not as easy as you thought. So now you're blowing your trading plan out of proportion, and this can turn into a deadly cycle. Let me warn you guys about this. This can turn into a very deadly cycle of, first of all, not trusting your edge, and then strategy hopping, wasting money, wasting time, and burning, honestly, not even wasting money, burning cash, honestly. I'm passionate about this because you have traders who have lost tens of thousands of dollars due to not having proper mindset, proper risk management. Not having these two can lead a trader down a horrible path of just blowing up accounts, getting back into the market, saying that they'll do better, blowing it up again, saying that they'll do better, wanting to leave their job, wanting to leave school, wanting this expectation that the market is not giving them. And the market is neutral. The market doesn't care about you, doesn't care about any of us. The market just does what the market does. So if you have this, mindset, this lack of self-control, and you lose money, it's not the market's fault. It's looking in the mirror and saying that it's your fault. Everything is your fault. And you have to take control of your mindset. You have to take control of your self-control to be able to make money, consistent money inside of the markets. I'd say, honestly, between this and risk management are the two main things that hold traders back at a certain stage. Two of the most, because we can't even get into strategy, honestly. We can't even go back and get into strategy, because how can I even assess your strategy and what you're doing if you keep on telling me that, oh man, today I just didn't follow my rules and I blew up my account and I made these 3-4 trades that went against my plan. I can't assess your strategy because you're going to have a certain win rate and it's not going to be right. It's not going to be right. This happened with me. I'd make mistake after mistake after mistake. It would be a cycle. Every 2-3 weeks, I'm making a mistake. So I couldn't even assess my data properly. I'd had to look at my data and be like, wait a second. If I didn't make this mistake, if I didn't make this mistake, if I didn't make that mistake, I'd be such a great trader. So what did I do? I had to stop making those mistakes for me to even become profitable, and then assess my strategy and refine it even more to become even better. So if you don't have the right mindset, we can't assess your strategy yet. You'll be stuck in a cycle. You'll be stuck at stage 1. So when we talk about mindset, we're looking at things like greed, FOMO, and anxiety, right? These are just examples. There's so many feelings that pop up when we are inside of the charts. It goes very, very, very deep. I'm going to make a whole video on just trading mindset and trading psychology, because even though it's not everything, you need good technicals, you need good risk management, you need a good way of seeing the markets. It is definitely very important, especially at certain stages and where we come from. Each of us have a different background, relationship with money that influence how these different emotions arise. So for me personally, I might have come from a less stable background where money was tight. So my relationship with money is going to be different than another person who came from where money was easily accessible. It's going to be different. We're going to react differently when we're losing money, because the ultimate goal of the markets is to make money. We came into this game for money. We might have a love for the markets, but we all still want to make money. So when making that money, if I lose, I'm gonna react a certain way, be more fearful. I'm gonna be more greedy. I'm gonna feel a certain way when the market do something. It all plays. Now let's talk about the last, and honestly, it's a very important pillar. Once you have everything else straight, fixed, the last thing to work on is your execution. And this ties into mindset as well. You have to have that Michael Jordan killer instinct when we come to the markets. You gotta show up and try to be perfect. Perfection doesn't exist. You have to show up like a champion, like a warrior in a garden, bruh. You have to show up, and at all costs, honestly, try your best and perform your best, no matter the process. And know that you cannot be perfect at the same time. That is a winning mentality. You have to be able to execute consistently, knowing that you're not going to make every single trade, knowing you're not going to make every single trade a winner, knowing you're not going to have 100%, but still going all in and still going all at it, just because that's champion's mentality. This is the last pillar of having an edge, knowing when to execute, knowing everything line up. It's just about pulling that trigger, consistently executing. Theory by itself won't bring you money. Live market experience will. So if you're a little bit more down your trading path, you might know about back testing, where I said earlier you look at historical price action to try and predict the future. That alone is not going to give you money. About different strategies. Even on my channel, I make videos about different strategies that you can use and start implementing, curate to yourself with all the other things that I talked about in this video to start making money in the markets. See, my strategy alone, all of them, honestly, can only work if you have these other things down pat. Risk management, mindset, everything. If you don't have any of that, that alone will not make you money. If you don't know how to execute my strategy that I talked about on this channel consistently, you're not going to make any money. We could throw that out the window. We could throw all that out the window. Any strategy on YouTube, honestly, if you can't execute it consistently, you're not even at the break even stage yet. You're in the consistently losing money stage, because you can't execute a certain strategy without fail consistently inside of the live markets. Theory, looking at YouTube videos won't get you anything, honestly. The best way that you can get experience on the battle is by being inside the markets live, putting real money down. That's why I said start off with a small account with some money. Put some real money into the markets, nothing to make big profits, but to get used to when we're inside the market. I don't know a single trader whose heart rate does not rise. Maybe a professional, but heart rate rises, you start getting sweaty, different things started happening. Just like I said, because of our related money. If you don't have this experience, if you can't execute when we're feeling all this emotion, and you could do it in backtest, and you could get or demo, you could get flip money consistently, then you can't be a trader. You need to execute in the live markets when everything is on your mind, when you're going through a bad day, when you're sick, when all these other things are happening, when the market slips you, it slowly comes to where you're gonna get in and then reverses. How are you gonna get in? Are you gonna be FOMO? Are you gonna have FOMO? Or when the market gives you a certain move, when your market goes all the way almost to your TP and then reverses a tick away from your TP or a pip away from your TP, are you going to be able to execute on the next trade? It goes deeper. Honestly, it goes deeper. A lot of people are scared especially when you lose. You're scared to execute now. It's like you're playing basketball, you make 3 shots in a row, and now you're scared to take the 4th shot, when the 4th shot can make you all back that you made on your previous. So you have to be able to execute. Now let's combine everything we just talked about, every single metric. To have an edge in trading, what do we need? We need a solid strategy, okay? Don't go into the markets thinking you can just go in there and click buy, click sell, and expect to make money in any markets over time. Don't expect to make consistent money just doing that. We need a solid strategy. There are strategies on YouTube. There are strategies everywhere. There are a lot of free strategies. And if you don't want to, get a free strategy as well, or the way that they see the market, and you can follow them. Even on these free channels, you can follow where they got in. A lot of channels do live streams nowadays too. Like I know a trader named Tanja who does her live streams. She's an ICT. You can literally follow these traders and how they get inside the markets based on their strategies. You need a solid strategy. You need good risk management. You need a iron mindset, right? You need the mindset to be able to execute consistently. You need to be able to execute without fail. It doesn't matter if you lost 2 in a row, 3 in a row with your strategy. You need to be able to have the good risk management, get back to the markets once you see the opportunity again, and execute, knowing that you're not going to make it all, knowing that you're not going to flip 100 into 10,000 overnight, knowing that you have to be consistent and self-disciplined, and multiply that by time to be extra successful inside of any market, crypto, forex, futures, stocks, anything, to have an edge over all of these markets, to have money chase you, not you chasing money. You need these things, honestly, and nobody can tell me anything about not having one of these. And as it's very important that you learn this now, today, you learn this and work on wherever you lack. If you already have a strategy losing, do you have a good risk management? Do you have a good mindset? Are you able to execute? And then, if all of this is yes, we go back to you know why? Because maybe you need better risk management. Maybe you need to cut your losses quicker. You need to look at your journal and see these little things that price does so that you can critique it and then make money long term. See, when you get to that break even phase, because there are different phases when you're a trader. You have the losing phase, you have the break-even phase, and then you have the consistently phase. All the things that I talked about earlier, mindset, blowing up accounts, risk management, that keeps you in the unprofitable phase. But once you get these things right, you have all 4 of these combined together, you at least will be better off in break-even state. Because once you're break-even, all you need is a little critiquing. You need maybe one piece of information. You need just a little bit to then be consistently profitable over time. It is easier once you have all of these together, get to that break-even phase, to inside of the right to start making consistent money in the markets. Now, what should you on as a beginner? You need to first learn day trading inside of any market. When you first learn day trading inside of any market, you should focus on finding a strategy first. Like if you're a complete beginner, first you need to find a strategy that makes sense to you. Like I just said, there's a lot of them on YouTube. There's a lot of people teaching strategies. So find a strategy, a way of looking at the market, a lens to see price that's to you. And then use proper risk management. Start with a small account, risk percent, risk $1, risk a certain fixed amount to make a certain amount. And do that for every single time your strategy appears and it makes sense inside of your system. Every time this pops up, get in the market, risk a certain amount. And most of them get live experience and also historical experience as well. But morally, live experience and observe the markets. Every day, be inside of the markets. See what the market does. You're gonna get, just like riding a bike, just like playing basketball, just like playing the piano. The more you are inside of it, looking during the right time when you're supposed to be trading, you're gonna get better at noticing how price moves, different tendencies of price, noticing different things like volume as well. We didn't talk about this, but volume is important. You're gonna notice volume. You're gonna notice these different things that price does. And it's going to be, as time goes on, you're going to notice you're going to become a better trader, honestly. Certain things that used to mess you up, you now are better in. It's just like the more you are in front of it, the better you become. It's very hard at first, just like it's very hard to ride a bike. It's very hard to learn any skill set. What does your brain do? It adapts. The more it's in front of it, it adapts. Now, I'm going to share a very simple strategy that I use inside of the Forex and the futures markets. Now, this strategy for me works in any market, and it's a framework to start seeing price. Just to lend. It's giving you just to start seeing price. So first, we're going to mark off our previous day high and our previous day low on the charts. I'm going to look at the gold market or the indices. We're going to weight price of these areas during the open. And then we always want to go with the overall direction of the markets. This is a simple strategy that I'm giving you, but you're going to have to do the work. You're going to have by yourself as well and see if this strategy is for you. I can't decide if this strategy is for you. You have a whole different personality and you like different things, but I will give you a framework to start seeing price. Now, we're going to talk about the charts and we're going to get a little bit technical here. So, as you can see, we have a lot of selling pressure. Right? Each day is marked off on the charts. If we go to the higher time frame and we look at what we're trading right now, which is US 30, the Dow Jones, but the future, which is YM, you see that we are inside of a selling trend. All that I'm looking at is sweep of the previous day's high because I want to sell. So I'm looking for price to sweep the previous day high before I get inside of the market, or you get inside of the market, and then sell price off. So all the previous day high is the highest point was at on the previous day. Previous day low would be the lowest point. But we want to focus on the previous day high. Why? Because we want to follow the overall trend of the market. We want to ride the market like a wave, honestly. So when the market's selling, the overall market's selling, we're selling. So after we see that sweep, we want to wait and then we sell price on a demo account, not on a live account. And this is just a framework to start seeing price in. And then we just aim for either a 1 to 2, 1 to 3, or whatever. So every time price takes out this previous day high and we're selling, or if we take out a previous day low and we're buying, I want you to look at price and observe, and then get in on your account and take a position, a small position. I don't want you risking a lot of money on this. I start seeing tendencies of price. See, a lot of traders, they'll give you a strategy and they'll have their broker link in the description or some prop firm in the description on a beginner video. As a beginner, you should not be looking at any of this stuff. You should be curating your strategy, your framework for seeing the markets. Now, there are different things that I could go in to combine with this strategy, but I just want you looking at price and looking at its tendencies. That's it. That's all. Now I'm going to go to another example. Right there. Did you guys catch it? Here. On this day. So you see how we didn't get it on Monday? Every day is not a trading day. Sometimes the market doesn't do your move, and that's okay. But we did get it on this day. We see what? Price swept previous day high during what time? 9 o'clock. We get in the markets, and then we observe what happens. And every time this happens, I want you to get out your journal. I want you to have a spreadsheet available. I want you to first track how many points this thing moved before reversing. I want you to go for your 1 to 2 when you have down if you hit profit or not. And I want you to each time what happens, each time how the market moved. And then over a series of trades, you need a sample size of 30 trades before you move on to the next stage, which is curating this and making it even better. And even looking at some of my videos I have on my implementing certain aspects to make it even more profitable. But first, I just want you to journal. So if you guys didn't know, I'm doing I just want to so before we get back into the actual video, I'm just gonna plug in. Before we get back into the actual video, I just want to tell you guys that I am doing a free giveaway of a prize worth of $500 once we hit 1,000 members inside of our free community and 10 people inside of our VIP on our Discord. To increase your odds, just make sure you're subscribed to our YouTube channel. Post every single week trying to give value out to you guys, and leave a like or comment. The winner will be decided once we hit both metrics. And then inside of our whole entire free Discord, I give daily education on what I see in the markets, and I also give out, it used to just be but basically free signals with full transparency for free, and they're always going to be free future signals. I give them out so that you guys can see the trades that I'm entering, when I'm entering them, the mindset that I have, and honestly, I'm overall profitable too on all of these signals, and I've been doing them since September. You can look back too to see and look at the trades that I'm taking and see how much risk to reward I'm making and everything. Honestly, if you guys like all that, just make sure to join, link in the description. And let's get back to the video and watch what happens inside of the live market and in backtest, but more importantly inside of the live market. You see, on this day we didn't take out previous day high. We didn't take it out, so you would mark that down as well. I want you to mark down this 2 where this appears most. So you'll mark down Monday, no. You'll mark down Friday, yes. Monday, no. Tuesday, yes. And you do this every single day. So here on this day, I would want you to okay, what happened? We saw sweep previous day high, but you might have gotten in on one of these candlesticks, and what? You might have gotten what? Stopped out. You might have gotten taken out. I want you to mark that down. Here, we're just observing. We're not getting too technical. You might have gotten in right here, and then what do you notice next? Oh, now price is reversing after taking out the previous day's high. At what time did it happen? How did it happen? How did it look? I want you to take pictures, and I want you to track. But the main components I just want you to is to reward on the trade. So how much did you risk and how much did you want to make? And then to look at what day it happened on. Those are the main things. And then I want you to also win rate. Those are the main things. So win rate, risk to reward, and what days that it happened on. Over a sample size of 30 to 40 trades on a very small account. Just right now, I've shown you 3 instances of this happening. 2 of them were a little bit easier. The last one you might have gotten caught up depending on what time frame you were on. So this is just for you to start looking at price during a view. It's not your final strategy, the way to see price. Now we're getting into the last portion here. This is advice I would tell me as a beginner if I was first starting off inside of the market. This is advice that I would tell myself. First, be completely obsessed with becoming a good trader. Not even a good trader, the best trader. Think about what the best trader would do. Even though you probably won't become the best, think the habits, the traits of the best trader and become that. Even if you're not profitable, act like it. Cut out all the noise, all of it. Honest friends, habits, situation, if you can. Cut it all off and plan on focusing on mastering the craft. Don't focus on the money. Focus on that craft of trading. Track yourself. Journal. Track, and by track, just get an Excel spreadsheet and look at your strategy. Plain in sight. Look at the statistics behind it that make it work. And why, too, it works. Learn a lot about the markets. Learn different components other than just technical analysis, honestly. Learn about the fundamentals. Learn how markets move. Learn about all these things. Come into the market thinking, I just want to make money, because you have hedge funds, you have people out here who do this for a living and want your money. Everything is against you. The odds are against you. Everything's against you. But prove them wrong. Prove them wrong to make it. You have to. And you have to believe in yourself, because nobody's gonna push this thing forward except from you. If you give up, if you slack off, it's all on you. If you win, it's all on you. That's the beauty of trading. Everything is on you. You have a couple friends. You might have a Discord group. But at the end of the day, it's not going to happen overnight at that too. It's not going to happen overnight. See, when I first started off this video, I talked about account flips. The problem with that is that people make it like this thing can happen like this in a couple weeks. No, it's not happening in a couple weeks. It will take years. Like I said, it will take years to master this craft. Everything is not going to fall in place immediately. You need experience. You need to go through your own journey. You need to lose bad. You need to get humbled by the markets. You need to gain experience before then seeing the results that you want to see. So it's not going to happen overnight. But if you be persistent and resilient, you will make it out. You just have to stick it through long enough. Every profitable trader, you can tell that they're profitable by the way they talk about trading. You can tell that they're self-made by what they say. They know that trading does not happen. Trading success is not an aha moment. An aha moment is a fantasy. There is no aha moment. You might have certain instances where you're like, oh, okay, I could have done this better. Then you're like, okay, let me apply this. Oh, the market does this. Okay, let me do this. But it is over time. There's no quick switch. You might look over the last 2 months, you're like, okay, I've changed. But that's only over time. Everything in trading is time. Everything in trading is time and patience. It's really hard at first, but then it becomes simple. I say simple because it becomes simple to execute. It doesn't become easy though. At first it's complex. You're getting in all this information at once. It's gonna be complex, but then it becomes simple, but not easy. I don't care what I don't care what anybody has to say, bruh. It's not easy. Consistently doing it is not easy. Consistently showing up is not easy, but it's simple. It's simple, but it's not easy. The market is always changing. The market wants your money. The market wants your money. It's not easy. It's not easy to sit back on your hands when price does certain things. It's not easy when you don't have money and you want to make money from the markets, but you know you have to be patient. It's not easy, and that's the reality of it. And you will lose a lot of money before making it all back. And that's the thing. Just like anything in life, you suck horribly at it. I used to play basketball. I was horrible for like 2-3 straight before I started making any meaningful progress with the right, education and coach and physical trainer and all of that. So the same thing in trading. You will lose a lot of money. You will suck for the most part. Every single trader I've met doesn't make it straight off the bat. It can be for a month, 6 months, a year until you wake up and you see what you're doing. But you will lose a lot. I've seen traders lose 10,000 to hundreds of thousands to a couple hundreds. Everything. Scammed. You will get scammed as well by Telegram groups that you fall for, by mentorships that haven't promised you what is supposed to be promised. You'll be scammed by a whole bunch of things. You'll be sad. And you'll think like, is it even worth it? Like, am I even supposed to be doing this? Am I even supposed to be trading? But you have to keep persisting and know that at the end of the tunnel, you're going to make it all back. The hours that you put into trading, no sense, honestly. I'm not going to lie. It's not a 9-to-5 we're talking about. We're building a business. In the first years of a lot of businesses, it's freaking break even. You're not making any money in most businesses. It's break even until you get to a certain point where you can actually make a profit. Most businesses fail the first couple of years, just like in trading. The hours don't make sense. You'll be putting in a whole bunch of hours, and making no money. Until then, you become decent, and now you have the leverage, and you're making all of that money back easier. So the hours don't make sense. I'm not gonna lie with you. The hours don't make sense. You have to really have a passion for this thing and a long-term vision for it to make sense to you. And know that at first you're gonna be making literally no money, and then at the end you're gonna be making all the money, and you're gonna dang. Imagine trading the whole year and you being negative. 2 years straight making no money, but you've been showing up day after day after day. But then the third year making more than both your, family members together. And then the next year making even more than that. And now you're making more overall. And then lastly, I want to say invest inside of a solid mentor. Now this is very, very, very important. Invest in somebody that you trust. I don't care if it's me. I don't care if it's, somebody on YouTube. Invest in somebody that first shows profits, but even more than that, goes into live trading, shows the way their strategy works, the way that they talk about the market. Examine the way that they talk. Are they just flashing you lifestyle nonstop back and forth? Probably not the best thing to do to invest in them. Invest in somebody who seems to have a passion about this thing, who's being mostly transparent, who's showing statements, who's giving you really solid advice and really wants to see you grow as an actual trader. Don't invest in people just based off of lifestyle. It's honestly the worst thing to do. You want to invest in somebody who you trust, honestly. So live trading is very important. Showing prop firm results are very important. Prop firm certificates, live accounts, the way they talk about the market. Are they talking about depth? Are they just telling you some basic stuff you can look up on Baby Pips? Are they really going behind what it takes, the mentality, the things you have to go through, the way your strategy works, the way the market works, your risk management, all of these things combined together? Are they looking into those things? Or are they just there to sell you something? Honestly, ask yourself these questions before picking a solid mentor and a solid mentorship. Now lastly, I want to say that I believe in you. This is the last slide of the entire video. Throughout this whole video, I've gone over what is day trading, the different markets, what it means to have an edge. I've given you a little piece of the puzzle for you to go get the other parts and put them together and solve this puzzle of day trading. And this video is not everything that you need, but it's a good start to get you thinking in the right way about the markets, any market that you're in. For me personally, I trade the Forex and futures market. But for any market, this framework, this thinking is going to work, because just trading the markets in general, these themes are all the same. So I believe in you and that you can do it. You have the potential to be great. You have the potential to be great. But you yourself have to put in the work. You have to see past the nonsense. You have to lock in, essentially. And you have to work on yourself. It is you versus you. My coach used to, back when I played sports, that he said that I can teach you, I can coach you, but I can't play out there for you. I can tell you what to do, but I'm not the one there with the basketball, shooting the ball, making the plays, doing what's right. You have to do that for yourself. The only way you're going to do that is by mastering yourself, by mastering your strategy, by getting that live experience. You have to put in the work and track your data. Never give up and always find a way to move forward. Any obstacle, you have to define the problem first. When you meet a wall, look at the problem face value. What's going on? Look at your data. Look at how you've been doing. Look at the market. And if you can't solve that, get somebody who can look at you and be like, oh, okay, you're doing this wrong. Because that's essentially what mentorship, that's essentially what mentors are for. They can look at you, they can look at your system and be like, bro, what are you doing? Why are you risking more on this trade than you're risking on this trade? Even if it's not a mentor, get a loved one. You don't need to even pay for, you could get an accountability partner who can look at you. Sometimes we don't even know that we're doing it. We don't, unless we look at the videos, unless other people are watching us and they could point us out in our flaws and be like, oh, okay, you're doing this wrong. This was keeping you back this whole entire. But never give up. There's always a way to move forward. Inside our times in trading is to see the most results if you're able to do it. Things are easy, not when you're winning. It's when you're in a drawdown and you're like, wait a second, I'm doing this wrong. The market is moving like this and I'm still trying to do this. I'm not in sync with the markets. That's my problem. When you're inside of these phases, you will get these realizations. Thing with life. And then lastly, this is a quote. I forgot who the quote was by, but I'll probably link it in the description. But he who has a strong enough why will overcome almost any. He who knows why he wants the thing will go to extreme lengths that nobody else will go to. He will wake up 2:30 a.m. working diligently. The man who loves it and has that why will work way harder. Wake up earlier, do way more. So really define, why the heck do you want to trade? Do you want it because I just want a lifestyle, you want that, but why do you want that? Define your why all the way down to the basic level. Why do you want cars? Want this? Why do you want that? Why do you want to travel? Oh, I just want freedom. Define it. Define everything until you can't define it anymore, and you end up at the most basic level of why you want to succeed at this thing. So every time you're going through a hard time, look at that, because you're gonna want to quit this whole thing, or you're gonna stop working as hard. You're gonna stop being as consistent, and you're gonna stop pushing as hard. Unless you have this why that pushes you forward and it's like, I can't give up on this thing. I can't stop. I have to. This why is the reason why some traders become amazing, freaking amazing, because they find a way through it. Human beings in general find ways to overcome as long as this why is strong enough. So make your why strong, like solid, literally solid, to push through any circumstance throws at you. Any. And I guarantee you're going to make it, or you're going to be at least on here. So that's it for this whole beginner series to day trading. How to start day. I've given you guys the keys, some of the keys to master the puzzle. But you have to put in the work, honestly. You have to put in the work. I'm on from afar, and I hope that you make it. That's it for this video, and I'll see you guys in the next one. Make sure to comment, subscribe, and if you're a real one and watch this whole thing through, hope you guys have an amazing one, and I'll see you guys later.